Welcome friends, welcome to my YouTube channel Forex FX. This is a video, it's a beginner's guide into forex trading. Here I'll be just explaining the basics of forex, things that you need to know in order for you to start trading or to get into the market, because without knowing these things you can lose a lot of money through many things, through scams, false signals. So it's proper for you to learn the basics first, and then you can then go. We have the introduction to forex, we have technical analysis and fundamental analysis. Technical and fundamental analysis forms the basis of the market. These are the things that dictate how the market works, how the market moves. It's more especially technical analysis, because fundamental analysis, it only takes place after news are released. And then you must also know the market structure, the structure of the market. You must understand the structure before you can place the trade. You must understand support and resistance. You must understand candlestick patterns, because they are the one that determines whether now you should sell or you should buy. And then technical analysis. What is technical analysis? Technical analysis is the study of the historical price in order to identify the patterns that determine probability for future movement in the market. Like I said, with technical analysis is also referred to price action. You'll check how the market moved in the past. I'll show you in my next video. You must first check how the market moved in the past, and the way it moved will detail how it will move in the future. So if you know technical analysis, then you know how it will move. Fundamental analysis, it's a way of looking at forex market by analyzing economic, social and political forces. Fundamental analysis, it only dictates the market there and there, because if you'll understand, forex stand for foreign exchange. So the market is also dictated by the economic, social and political forces of that particular country or particular pair that you are trading. Perhaps let's say you are trading USD to Japanese yen. Yeah, these two. What is happening between those two countries will determine how the market moves, but it will be only a short time after the news are released. So in fundamental analysis, you must be a person that also follows daily news on how the market and the economy is operating. And then we come to number 2, the market structure. The market has 3 phases and 3 trends. You must also understand the phases. Then we have the secondary phase, is the major trend from 1 year to 6 months, meaning you must check, or from months, you must check where the market started. Like I've said in the technical, when I was explaining technical analysis, you must check that from last year up until this year, how did the market move from which point to which point, to up until to the month where you are trading. In that way you will know now the market is in an uptrend or is in a downtrend. So the secondary market, it dictates what happened in the primary. The primary dictates what it happened in the minor trend. So the primary trend reacts to the actions of the secondary trend, just like I've just said, that the secondary phase reacts. The secondary phase dictates what's happening in the primary. That's why the primary will react. The primary start from months to weeks. Let's say like now we're in September. You must check from September the weeks. I think this is the first week of September. You must check the weeks. This is the primary trend. How did it move? How was it moving from September and August? It will tell you whether it's in an uptrend or a downtrend. And then we have the minor trend, which is the daily trend. Most profitable traders are daily daily traders. I will also post a video where I'll teach you about types of trading, where we have swing trading, we have scalping, we have spiking, we have spikes, and then we have daily trading, and then I'll explain that in the next video. So you must don't forget to like and subscribe to my channel, and then check the following video. And then we have trends. We have an uptrend, we have a downtrend, we have a raging market. It's also important to understand these principles, because a market moves in trends. If the market moves in an uptrend, it's in an uptrend. It will move in higher lows and higher highs, higher lows and higher highs. If it's in a downtrend, you'll see by a higher low, by a lower high and a lower low, a lower high and a lower low. So, but then if it moves in sideways, it's ranging. In other words, it's consolidating. The market always moves in an up. If it's in an uptrend, it will continue being an uptrend until a definite signal has said that now the market must go down. But before it goes down, it must range and test, because in some trends there is this thing called continuation. I will also do a video explaining that, because this is just a simple summary of what the market is, what to expect, what to know about the market. And then number 3, we come to support and resistance. Support and resistance is also important. You must also understand, because where let's start with resistance. Let's say a market was in an uptrend, like here, as you can see, where in the picture the market was in an uptrend, and then it reached the resistance. It went down, it reached in support, it tried to test the support again, the resistance again, and then it went back. Once there are two segments that touch in the same line, then it creates the support. It means the market is going into a downtrend. Here it breaks, and then this is the support. The support also works like the resistance. And then we have candlestick patterns. You must also understand candlestick patterns. We have the doji candlesticks. The doji candlestick, number 1, we have the doji star. The doji star, it's a candlestick that it tells you that now the market is also consolidating, but you'll find it within candlesticks. It tell you that the market is consolidating. Before you can put a trade, you must wait until you see whether the next candlestick is going up or going down, because it can also form a morning star, it can also form an evening star. And then we have a dragonfly. We have also a dragonfly. A dragonfly is also considered bullish. Here it shows you that the market opened high, and then it went down, and then the bulls also put the forces to go up, so it created this this type, and this is a signal that the market now is going up. And then we have the gravestone. The gravestone is a bearish. You will find it in an uptrend, and then if the market is going down, and then it shows that the market tried to go up, but then the bulls drag it down, and then that's doji candlesticks. And then we have engulfing bar. Engulfing bar, we have a bullish and a bearish. The bullish engulfing bar, it's formed in the support level or in a downtrend. This way, the last candlesticks of the downtrend, it's smaller than the second candlestick that will be formed, that is bearish, and then it signals that now the market is going up. And then we also have the engulfing bars. The bearish one is also found in an uptrend. It also signals that the market is going down. We have also the bearish and the bullish harami. This is the bullish harami. A bullish harami happens in the downtrends to show you that now the market is going in the uptrend. And then even the bearish haram, it happens in an uptrend to show you now the market is going in a downtrend. And then we have the dark cloud and the piercing. That's the end. Please don't forget to like and subscribe on my channel. I'm still going to post other videos where we will be analyzing the market. I will be explaining these factors on a graph where I show you where is the candlesticks, this is the minor market, this is the major market. I'm still going to do a video like that. Don't forget to like and subscribe. Thank you for watching.